have the legendary Aaron Kapp. And I know over the years, y'all have heard me talk a lot about Robin as being my loan officer. Aaron is actually my other loan officer because he works right down the hall from Robin. They work in the same group. He's been under her tutelage for, what has it been, 6-7 years, something like that. Matter of fact, he is so entrenched with Robin that he married her daughter. Way to get that promotion, buddy. Just season. No, he's really good at what he does, and I just kind of wanted to talk to him a little bit about it because if you do not follow Aaron on the Facebook or the Instagram, you need to do that. Aaron Kapp with Kapp, Aaron with 2 A's, Aaron, and he's with the Cachet Real Estate team. So I'm typing that into the messenger right now, so that way everybody knows how to spell Cachet because it took me a minute to get used to that. So yeah, go follow him because he does. He pushes out some great videos, great information. And I had the idea. I said, hey, let me call Aaron. Let's get him on this call so that way he can talk to us about what we need to know going forward, and especially when it comes to 2022. Because the last video I saw you pump out was talking about what some of the changes that are coming up this year when it comes to lending, which a lot of them I think are going to be incredibly important and really applicable with the house pricing the way it's going, inflation just rearing its ugly head, and we got a lot of fun stuff coming around those lines. So first and foremost, Aaron, tell us a little bit about yourself. Where are you from? What do you do? Tell me, what's the story? Give us your elevator pitch.
Definitely. So Aaron Kapp, born and raised here in San Antonio. Stayed here for school, went to UTSA, graduated in 2013. So as you know, I'm loving this football season. Seeing the team finally ranked nationally is pretty freaking cool.
We got to go to a game. We have got to go to a game. And I hear that UTEP's going to be televised. I think it's this weekend.
It is, but it's past my bedtime. They moved it to like a 9 o'clock kickoff.
Oh,
so,
is it in El Paso?
I'll be asleep before kickoff. I believe it's at UTEP.
Yeah, save that extra hour.
I'll wake up to the good news Sunday morning. So yeah, born and raised with UTSA. Married my high school sweetheart, Ariel Kapp. So I've known her since I was in high school. Watched Robin as I grew up, went through school, graduated. I was working in commercial real estate finance for IBC Bank. Robin had started a mortgage broker shop, asked me to join. I said, heck yes, let's do it. That was 8 years ago. I've loved every second of it, and I feel like I'm only getting better every day. As you know, kind of few of my hobbies, golfing and motorcycle riding, and that's about it. I stay pretty busy with the real estate world, so I don't have a lot of free time.
I wish I could go motorcycle riding with you, but my wife has forbade it because I have kids now. So, yeah, she says I can't do it anymore. But it's lots of fun. I enjoy it. And then also taking your money at golf is always fun, too. So you're working with Cachet. You've been doing it, since 2014, pretty much what you said, and we're getting in here. So the first things first, how do we start with an RMLO? What would you say that, like, guys, I'm going to go ahead and tell you. The first place, if somebody comes to me and says, I want to buy a house, the first words out of my mouth are, have you talked to, excuse me, we got Mia coming in. First words out of my mouth are, do you have a pre-approval letter? Are you on top of this? Do you have what you need? Have you met with an RMLO? Because if not, I'm not showing you any houses, because there's so many people that think they're qualified or think this or that don't really know what's in their dirty laundry. So when it comes to looking for RMLOs, what are some questions that we need to ask RMLOs if we're working with them, if they come with a pre-qualified letter, anything like that? What are the first things that we need to ask the client and ask an RMLO if it's not somebody like you, Eric?
I would say have all, and you can ask it for both the buyer and the RMLO, have all the documents been provided? Because all too often, if you've got a good credit score, RMLOs are pushing out those pre-qualification letters immediately. They got a good score, get it out the door. To me, that's very risky. Like you said, there's a lot of dirty laundry that people may not even know affects their qualification. And if they haven't turned in their documents, you get that pre-qual letter, you're shopping, you might get bad news later. A divorce decree that wasn't disclosed, income that dropped, income that changed, career change. There's too many things that can go wrong that the client doesn't even know about. So that's my immediate question, if I were a realtor, is have the documents been provided to the lender?
Right. And that guys, I can't tell you how many times that's been burnt me, because I get a lot of people that are like, oh, I went on fillinthablank.com and got pre-approved. Guys, if you have not sent in your paycheck stubs, your tax returns, all of that kind of stuff, it doesn't mean anything to me. It really doesn't. People lie. So I know it sounds weird, but people lie. And one of the things that I love about Aaron and the entire cachet team is they do the heavy lifting on the front end. Just about every non-cachet team person that I've met with, like we get to the 11th hour, we're like a weekend before closing, and then all of a sudden the loan officer goes, "Hey, I need these docs." And guess what? Every single time the closing gets pushed back. Aaron, why is that so important? I mean, what causes these pushbacks? What causes these problems in the 11th hour?
Ultimately, it's just the fact that the real estate world is so busy right now. Underwriters are busy, LOs are busy, y'all are busy. Everything is bottlenecked at every step of the way. So it's not just, hey, I turned in my docs, we're good to go. Everyone has to get reviewed and verified. So everything is slow right now. And then also just things that pop up that you don't, like I said, not that people lie, they just don't know what they're supposed to tell you. Hey, I make 50 grand a year. That's all you need to know. Yes, but I also need to know that you're paying, $500 a month in child support. Now you don't make 50 grand a year, because that's a new liability that's not on your credit report. So that's what usually what happens is things are found when we're reviewing the docs. And like you call them liars, and I know some people will try to fib a little bit, but you don't know what you don't know. And as consumers, they don't know what they're supposed to be telling us. And I always like to tell them, tell me everything up front, because I'm going to find it. And I'd rather find it up front than, like you said, at the 11th hour.
Right. Yeah, for sure. So quick overview of the process. When you contact somebody, what do you ask for? What do you do? What's coming out of your mouth, so that way our reps know what's happening when they hand you off?
I tell the same thing to absolutely everybody, whether it be the realtor or the client. I say, let's get you started on that loan application. I do share my online application because too much can be mistranslated over a phone. I shoot it to them, have them fill it out, and then request documents as quickly as possible. And if they can give me documents same day, I give you a response same day. Because I get that question a lot from both sides: is how fast can I get a pre-qualification? Well, how fast can you get me the documents? If I can't determine your income, I'm not going to give you a pre-qual. And I know everyone's excited. We want to get shopping as quickly as possible, but that's what I'm asking people. At minimum, I ask for, I can say it quickly, is pay stubs, W-2s, tax returns, and bank statements. You give me at least those 4 items, I know what you look like as a client.
Okay.
So get online, knock out the application, give me the docs.
So you dropped a word in there that is such an important distinction that I really want you to say, because I feel like I say it all the time and nobody listens to me when I keep repeating myself. What is the difference? You said pre-qual, short for pre-qualified or pre-qualification letter. What's the difference between a pre-qual and a pre-approved? And why is that significant? Industry-wise, the pre-qualification is just, we've looked at your credit, we've looked at your stated income, and according to what we've seen, you are pre-qualified to buy a house. But as we've said, it's useless. Just because you have good credit and you make a lot of money doesn't mean you can afford what's on paper. Pre-approved is everything's been verified to underwriting guidelines, and it has been automated underwrite, which means we've sent it through a Fannie Mae, Freddie Mac system to say, is this loan approvable according to Fannie Mae, Freddie Mac guidelines? We have reviewed the documents, we've reviewed the assets, and we know that this loan is pre-approved as opposed to just pre-qualified. Right, guys. So if you are representing a seller and somebody comes to you with the exact same offer, one with a pre-qualified letter and one with a pre-approved letter, that pre-approved letter is going to carry a lot more weight. You're probably going to run into a lot fewer problems as we get closer to closing time. So just kind of a heads up. And if you can get your clients a pre-approval letter, that's going to go a long way when it comes to making offers on that side too, if you're representing the seller. So pay very close attention to that. So real quick, walk us through the types of loans, because I know this is going to come up as we start talking about what's going in for 22. I know there's basically 4 main types of loans. You work for a broker and a banker. So do you want to talk a little bit about the difference between broker, banker on the mortgage side, and then also what kind of loans that y'all typically do?
Definitely. Difference between broker and a banker is a broker similar to you. We're farming it out. It's not our own product. We are shipping it to an investor, and it is their own product. As a banker, we are lending on our own funds. So we kind of have a little bit more leniency as a banker because we've we follow Fannie Freddie guidelines 100%. No overlays. What Fannie and Freddie will buy, we will fund, and we will sell direct to Fannie Freddie. And that's huge, selling direct to Fannie Freddie, because, like I said, no overlays. You follow what's in their automated approval, and it's straightforward.
So real quick, back up. Yeah, back up. Tell us who Freddie and Fannie are, and Ginnie for that.
Fannie Mae, Freddie Mac, Ginnie Mae, they are the government-backed entities that are purchasing and insuring the mortgage loans on the secondary market.
So ultimately, you want a loan that is so well put together that one of those government entities will buy the loan. That's what you're trying 100%. To do. Yeah.
Correct.
And some loans are held in banks, but they tend not to have such great terms.
Correct. That's what you had mentioned. You mentioned the 4 products. You've got conventional loan, FHA loan, a VA loan, and then the 4th product being a USDA loan, which I haven't seen one of those in 2 years. Just with the way the market is, getting somebody other than a VA borrower 100% financing in this market is just, it's kind of unreasonable when you're having to offer, above asking price. The reason I stuck my thumb up is we do have a 5th product, not something I would offer because I am a Fannie Mae, Freddie Mac backed bank, but there are bank products. When I say bank, I do mean the small town banks, the First National Banks of Bernie, the Texas Bank of Floresville, the small banks. That's a bank product that you are bringing minimum 20% down. You are going to have a higher interest rate, but they are a little more forgiving because they are collateral based. If their collateral's there, you default, they take the collateral, they run with it. But like I say, we do like those 4 government-backed ones because you are looking at lower down payment and you're looking at much better interest rates long term.
Right. So tell us who qualifies for each one of those and when the questions should ask. And I will say this: the property on the USDA, it has to be a USDA-able property. Like the actual subject property has to fit into their guidelines as well. But tell us, like, when we're talking to somebody, when do we bring up these situations, or do we just keep our mouth shut?
In my honest opinion, I like to say as a realtor, know the very, very minimum on each, but like you do, send them to the lender. You don't want me talking about what could happen on the real estate side because I don't know your side. I don't know what's going to win an offer. I don't know, the current, and I understand the market conditions. We're in the business, but I can't say, hey, talk to Colin about getting seller concessions right now. That's going to excite the client and say, heck, if I don't have to pay closing costs, this is great. And you could say, well, dang it, Aaron, we're never going to win an offer if we're asking sellers to cover closing costs right now. Similar to on the financing side, I can go over all the intricacies of each loan product, but even at that, I don't go over that with a client until I know what they qualify for. Reason being is I don't want to tell somebody about the USDA loan, which is 100% financing, but they're looking in downtown San Antonio. When we say USDA, we do mean the same people you see on the milk carton. This is United States Department of Agriculture that's backing these loans. So they are looking for rural properties, but they also have income limits. So again, I don't want to excite somebody about a great program like that, 100% financing, if they do not qualify for it. Similar to VA, 100% financing, but it is limited to veterans and their spouses and primary residents only. The big 2 that most borrowers and buyers will qualify for are the FHA and conventional loans. Both of them have pros and cons, and I would go over that with the client in numbers specific to their scenario. Neither one is great, neither one is bad. It's specific to your current financial situation, your short-term and long-term financial goals with the property.
Yeah, and guys, we're going to touch on some basics here. And for everybody listening and watching this stuff, I think what Aaron just said makes me look really good out in the field, because what I do out in the field is I tell everybody, he just did one of my clients just recently, right? He got them pre-approved and we're good to go. But I tell them flat out, I don't know, because they ask me all these questions. Well, can I get like 5% down or 20% down or this and that? I'm like, I don't know. And I don't want to dig through your dirty laundry to figure that out. Aaron, that's Aaron's job. And I tell everybody, go talk to Aaron. If you're buying a house, you've got to go talk to somebody else in an RMLO first. You have to talk to them first before I'll even help you, because I don't And then Aaron will call me and tell me what's going on. Hey, look, you need to do this, this, or that. Maybe they do need concessions. And you go, Colin, you got to find something you get concessions on, or whatever the situation might be. Because like Aaron, this is the joke I crack with my client. Aaron finds you money, I help you spend it. Period. The end. Okay. I don't want to know. Aaron doesn't disclose to me. He doesn't send me your IRS tax returns. He doesn't do any of that stuff. He can't. I don't care. Whatever you talk with Aaron about is between you and Aaron. He's just going to call me and say, here's how much money you got to spend. So real quick to touch on the basis of them, USDA and Veterans Affairs, the VA, right? Those are the two that you can possibly get zero down. That's correct?
Correct.
So that's kind of a nice product. Now, it kind of makes it hard if you want to move quickly. Like if you think you're only going to live here a year, maybe two, having zero equity in your house kind of becomes a problem on the selling side. And then the next one that we go is another government one, which is the Federal Housing Administration, which is the FHA loan, which can be as low as 3.5%. Correct me if I'm wrong here. I hear a lot of agents go, you should get an FHA loan because it's only 3.5% down. It can be 3.5% down. Am I right on that? Like sometimes that's not really the case.
Correct. It is a more forgiving product. So minimum 3.5% down. Like I said, it is more forgiving. If you do have a lower credit score, we can get you into an FHA loan with 10% down. But also what's great about FHA is it is more forgiving on the debt to income ratios. So your first time home buyers, even if the down payment isn't the issue, if you've got student loans or you've got that first car with a big payment, you can afford more home on an FHA product than you would with a standard 5% conventional.
Right. And so that was the last thing I was going to touch on. I hear so many people say to me, oh, a conventional loan, I got to put 20% down. That's not
Absolutely
the case
not.
either. Yeah. So, I mean, where does a conventional loan fall? I mean, what could it be? What are the options there? What do you see shake out a lot of times?
Most of the time, 5%. They do go as low as 3% down, but those are specialty products. But standard conventional will be 5% down. I do get it all the time. I have to wait till I get 20%. You absolutely do not. Great thing about these government-backed loans, Fannie and Freddie, is that you can get private mortgage insurance on a conventional loan, and that's kind of what covers the spread between that 20%.
Gotcha. And then what if they don't have any money to put down and they really want to buy a house? Should they still come talk to you?
Absolutely. We've got two options. First being, I do have down payment assistance programs if they absolutely need them. I think they're wonderful products. I've closed several of them. Between me and a realtor, I do like to say nothing in life is free. It's a great product if you need it, but you're paying for it. You're going to have I'd like to say a significantly higher rate, but you do get the free money. So it's a great product for people that are, I want to say in desperate need of buying a house, but they don't have any of the options. Well, what are my other options? I don't have savings, gift funds. The down payment does not have to necessarily be your savings. You've got mom, dad, grandma, grandpa. They can gift you your down payment on any of their products. VA, FHA, conventional gifts are allowed. Oh. And I want to bring that up really quickly on a VA loan, because I do get it a lot with my VA first-time home buyers, is I get 100% financing. I don't need to bring any money. We can lend up to 100% of the sales price, but there are still closing costs involved. And I do run into that a lot. So that might be something to prep your VA buyers on, is just because we're going to get 100% financing on the home, you do still have to worry about closing costs.
Yeah, guys, and closing costs can vary on a lot of different things. I mean, it can be commissions that are being paid, depending on the split. Typically, the seller does that. The points charged by the lender for setting up the loan, title insurance, survey fees. I mean, all of that stuff, they still might have to pay for. So on a $200,000 house with 100% financing, I might still have to bring $8,000 or $9,000 to the table just to cover whatever needs to be happening. I mean, it's all circumstantial. I mean, but just heads up, nothing. Yeah, very seldom do I see somebody buy a house and not walk in with a check at all. I am kind of proud of myself. I'm buying one on Friday where I'm not going to have to walk in with a check at all. But that's some pretty advanced stuff because I don't think I understand it yet. So I got till Friday to figure it out. So next point. So, all right. So Aaron, we got somebody who wants to buy a house. We send them over to you and they are just a complete wreck of a financial mess. And what do you do at this point, and what should the realtor do at this point?
At that point, I let you all know, hey, put this in your pipeline. This might take a little while, and I'll give you a timeline based on the buyer's, I guess, their engagement. If it's a quick fix, I can help them out. If it's just a credit issue, if it's minimal credit issues, I can put them on the right path. I've got a simulator that I've now have their credit report, plug it into it, and I run what's called a what if simulator. What if they paid this credit card down to this? What if they paid off that debt? What if they had, et cetera, et cetera? And it's not perfect, but I can tell you in my 8 years, it has always been spot on within 1 to 2 points. If they do exactly what they're told on this simulator, and when I say exactly what they're told, if I said, hey, Colin, pay down your credit card to $25 and pay off that loan, and you go and say, okay, what's the only extra $25 I'm going to pay off the credit card? You've just messed up the whole simulator. So you got to do it very specific. Like if you said $25, pay the $25, we'll get your score up.
I tell that story about all the time. Do you remember we were helping a lady buy a house out in Bandera, and it was her and her daughter? Do you remember this? Probably 2 years ago, 3 years ago. Yeah, and then we all sat down around the table. They wanted to meet you. They came in. They did all their stuff, and you were punching some stuff in, and you go, do you have that, I don't remember, Discover card on you? And you're like, they were like, yeah. And they were like, they were so proud they had no debt, like no credit card debt. You're like, go buy lunch on that, but don't spend more than $25 or something. You had some parameters. They went.
It's that precise, yeah.
Yeah, and so you're like, don't spend more than $25, but you got to get something on that credit card. And they came back after lunch. You dropped their rate like 1.5 points or something like that. You're like, thank you very much. Let's lock that in. Let's do this, that. I mean, it was some ninja loan stuff there. I don't know. Yeah, that was pretty advanced for me. I was pretty impressed. So
we'll do that, like I said, on a close lens. If we've got bigger issues, I do have great credit repair companies that I will refer off to that helps me, which in turn helps you. They'll put them into a program and they'll keep me updated. Hey, Aaron, they're starting at 550. We're going to get them to 620 for you. Sounds good. They'll give me updates and then I'll pass that on to you. Hey, Colin, buyer's working on it. They're doing what they need to do. Don't forget about them. And I know we have some people in our pipeline. Hey, Colin, reach out to them in January because that's when they're going to be ready. So that's what I'll do for you all with the credit challenge or income challenge, whatever the case may be. I make sure I get them on the right track. I'm not a no lender. I'm a not right now lender. If you can't buy a house right now, but you want to buy a house, let's get you on the right track.
Right. So, and then this next part, I'm going to steal the first part of it, is I'm going to ask you, I'm going to send this to every realtor we have. They're all going to want to watch this. What things do you want to tell realtors, like to make your job easier, make the process better? Like, I mean, if you've got the mic and you're just like, listen here, this is what you need to do. I'm going to start with 2. Number 1, don't try and talk loans with people. Just kind of know the basics of it and then just say, go talk to the RMLO. Guys, there's so many rules, so many laws, so many regulations, Dodd-Frank. I mean, there's a bajillion things that these guys have to abide by at this federal guideline. That's why it's a separate license and they do this full time. You might get to where you understand it all, but it's ever changing. Don't just go talk to the RMLO, period. That's what I tell my clients. I don't want to know. Just come back and give me a number. Number 2 is I tell everybody, if the RMLO asks you for something, drop what you're doing and get it to them. The longer you take to do something for them, this whole process slows down. And if you're like me, if I see something shiny, I'm off chasing that. I can't, if I get an email from Aaron or somebody that on the loan side of something, I'm stopping what I'm doing and giving it to them right this second, because I know that all it's going to do is delay everything. And it is kind of a tidal wave effect. Like if you're 2 weeks late on this, then it's going to take an extra 2 weeks on the back, and it just kind of eats you alive. So those are the 2 pieces of advice I would give. I don't know if you would agree with those statements, and then what would you tell all these realtors, especially the new ones?
100%. Absolutely. Just have the client get me the documents. And the reason to me that's so important is you as a realtor know, how engaged is this buyer? Do they just want to go look at homes, or do they want to buy a home? If they're not getting me the documents before they go shopping, do we really want to stress getting under a contract for 30 days and trying to get that client to get me the documents within that time frame? So avoid the stress, get the documents to Aaron as fast as possible. And then 2, is wait for that pre-approval. I know people want to move quickly. I know they want to get shopping, but if you agree to take somebody shopping this weekend, they've got what they want as a buyer. They're looking at homes, they're shopping. They're going to put me on the back burner because, like you said, you've dangled that sparkly thing in front of them. Let's go look at homes. And like I said, we're going to put ourselves in a sticky situation if we get under a contract and have to get all these documents within 30 days. And you know how stressful it can be. Like, let's get the stressful part out of the way, get Aaron out of our way, and let's enjoy the home shopping process.
Yeah. And I think, I mean, personally, guys, I'm going to share with you my experience, and I'm going to let you give a little sales pitch on this. But like the people that go to online.com and get a mortgage pre-approval or pre-qual, and they do all of this stuff, those guys put them in a queue. They go, here's your letter, bye. And then they put them in the queue, right? And they wait for you to call them back saying, we found the house. The problem with that, guys, is you find the house and you put it under contract for 30 days. Most people don't realize is there's a lot of laws that you have to follow and document because you get audited by the federal government to make sure you're not giving people too much house that they can't afford. So you have to prove without any kind of doubt that they can't afford that. And there's certain limits and numbers and all that crap. And I'm not going to get into that. But so what happens is then you send that house over, and then mortgage.com or whatever says, okay, great, I need you to send me this. And it turns out you have a problem going on, those kind of things. You know, and then now we can't buy it, or we have to push it back, or we lose our earnest money. I mean, I've seen 100 problems because of the lending process. Why would you suggest using Cache, RMLO over any of those .coms? Like, what's your elevator sales pitch on that?
And I'll start with what I've been saying now for 7.5 years. In my 7.5 years, I've never had a loan declined, and I've never had a contract withdrawn because I get everything up front.
Yeah.
And just point blank. Do we miss closing dates? Occasionally, but you know there's lots of parties involved. If I can't get an appraiser to turn in an appraisal, I'm not closing on time. But if I'm not going to close a loan on time, I'm not going to say if I'm not going to close a loan because I don't know what that feels like. But if I'm not going to close a loan on time, it's because of somebody else, not because of me.
Yeah.
And that's why I'd rather delay getting you a pre-approval letter saying, Colin, I don't have my docs. I'm not going to give it to you. I don't care how excited you are to get shopping. I need these docs because I know that once you get that contract, we've got a lot of things still left to do. And I want to focus on those, not chasing our clients for pay stubs, W-2s, and tax returns.
Yeah, and one of the other things that I personally love, because I do have clients that come to me and they're like, I want to use whatever.com. And I'm like, okay, fine. Can you please go call these guys as well, right? Just please. It's going to go a long way. Some of them want to, some of them don't. I can't tell you how many customers I've had that have done that. And then they go to you or Robin or somebody in the office, and they get mad because you're asking for so much paperwork and blah, 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 blah. I don't want to deal with all that. They didn't ask for any of it. I know, but they're going to ask you for it. It's coming, like I promise. No, we're just going to go with them. And they just blow y'all off. And then here we come to the 11th hour, and I'm having y'all rescue one of my mortgages where it's like, hey, I need y'all to get on this, because it's not a marketing center. All the .coms, all of those big things are just marketing centers. They just have TV commercials and all this stuff to line up as many people in their pipeline instead of actually taking that one and getting it all the way across the finish line. They just kind of let see whatever comes out the bottom of the funnel, whoever actually listens. So that's one of the things that I personally like as well. Plus, when I call, I talk to you. I don't talk to operator 642 that has to go back and review all the notes and then find out what's going on. That drives me insane. Like when I call you and I go, hey, what's going on with this loan? You're like, hey, do this, this, and that. Thank you. Bye. Click. I'm off the phone. So that's another thing that I really, really like. So talk to us now about what's happening in the mortgage industry, what you're seeing coming up on the future. Lately, we've been all like, oh, we got historic low interest rates and all this kind of stuff. What do you see happening? What's your kind of little prediction, as it were, and what's changing in 2022 when it comes to the physical laws and different things that are changing?
Definitely. So I'll start off with the bad news. We did see historic lows last year, beginning of this year. We hit rock bottom. We were basically handing money out. Those days are gone. I don't think we're going to see a skyrocket in rates, but we are going to start to keep seeing them, creep up, which we have been lately. I've gotten a few people in the high twos, but those days seem to be going away here very shortly. So we're going to keep, rates going back up, but I don't see them going up quickly just because understanding the market, you don't want people to freak out. You don't want the, housing industry to crash at any point. So we're not going to see increased interest rates, quickly, but they are going to start moving back up. So that's the bad news, but again, still historic lows. These rates, last February, I was calling all my clients that I had done before and said, refi. Rates are in the low threes. You can't believe it. You got to refi now. Not knowing that, of course, it's going to keep dropping, but we're at historic lows, but we are going to keep seeing them move up. Good news, though, is Fannie and Freddie Mae are recognizing that housing continues to increase. And in 2022, they're going to increase the conforming loan limit to $625,000, which is an increase of like over 75 grand. I think right now it's 548,250. So we're going to see a big increase in our conforming loan limit, which does help with the higher priced homes. Really good news, though, is that here at Mortgage Financial, as a bank, we're funding loans now up to 625 with conforming loan limit pricing and guidelines, and we'll just hold it until Fannie and Freddie are buying them next year.
So real quick, you keep using that fancy word, conforming. Tell me what conforming means, because that way, whenever you say it to somebody else, they know what you're talking about. Because I know clearly, but
conforming is just what Fannie and Freddie are loaning up to within their guidelines. Anything above that turns into a jumbo loan, and that's a whole different animal, different underwriting guidelines, different interest rates. Great product, but not as pretty as the Fannie Freddie products.
So what is the number for the jumbo loan coming up in 22? What'd you say?
625,000.
625. So anything less than 625 of the total value, not the loan, it's the value of the property or the loan?
The loan. I can lend up to 625 at a 95% loan to value.
So if I buy $1 million house, if I do $1 million house and I put $375,000 down, I can still get a conforming loan.
Correct.
Gotcha. So it's the loan limit, not the price of the house.
Correct.
That was new for me. All right, what else we got coming up? Anything else new?
Nothing too big that I know of. I know that we've still been pretty lenient on underwriting as of right now. COVID really, made everybody get real tight last year, and they've let go again. I don't see that changing anytime soon, just because of the way the housing market is. Nobody wants to see that slow down.
Yeah.
So.
Yeah, I think I was reading an article the other day, and this is kind of macroeconomics, not necessarily RMLO, but with house prices, San Antonio had a 19% increase year over year. I just got an email from Sabor the other day. The median sales price for a home in San Antonio is $350,000. That's insane to me.
Jeez.
You know what I mean? At 358 or something like that. I mean, that's huge numbers for San Antonio. You know what I mean? I can't imagine. And now we're starting to see the effects of inflation coming up. I mean, the government does what the government does, right? But they've been printing a lot of money, and when they print a lot of money, the inflation is going to go up. So that's going to continue to cause house prices to go up. I mean, part of it's going to be the natural increase in value, but the other part's actually going to be that a dollar's buying you less. So that's going to cause the price to go up. We've got interest rates that are going to start to climb back up. So the article was pretty much saying in 3 or 4 years, something like that they were thinking 1 out of 3 Americans will be able to afford a home. And it's literally becoming a problem because people's salaries aren't increasing at the same rate that everything else is. So it's going to become problematic here pretty soon. So guys, if you got somebody sitting on the fence or wanting to wait a few years, I really think we gotta hustle. We gotta make hay while the sun's up. And I think the sun's starting to set. So it's a good time to get your people out there and doing it. So, all right, anything else you want to tell anybody before I open it up to questions? Anything you want to share about anything, whatever it is? Tell us what's wrong with your golf game while you're getting lessons.
No, I think we've covered it all. I think it's, like I said, but my big thing, I think I've said it every time I've had a chance, is get the client to get us what we need early and tell them as often as possible.
Yeah, I've seen that. I seen that all the time, and I won't show people houses personally until they get you what you need. You called me the other day for Mariana, that one of my clients, because she finally got, you're like, okay, I got everything I need, right? You're like, got it. It's like, thank you. Now she can look at houses. And I'm strict about that because I don't want to waste my time. I mean, it takes a lot. And for some reason I keep showing people houses in Helotes, and I hate driving in Helotes. Because the traffic over there sucks. All right. So anybody got any questions for Aaron? Anybody got any specific questions about loans? What's going on? What you're doing, what you're not doing, what should you be doing? Questions like that. Anybody? Don't leave me hanging, guys. I know we're not that good. Nobody.
No questions here.
Come on, nothing. What about this question? Aaron, where can people find out more about you if they want to use you?
Easy.
That's a good one.
It's going to be my first initial, last name, kapp.mortgagefinancial.com. And I'm double checking that real quick, but I could definitely share. I'm going to plug it into our, right here, plug it into our comment box so y'all can have that. But it's kapp.mortgagefinancial.com. Has my info on there. It'll have the loan app. It's got some calculators, fun stuff on there. But I'll do my website. It's also, I can even share, I have my own app that helps those clients who are on the fly and want to knock out that loan application real quick.
Oh, speaking of loan apps, stuff on the fly, can you help us get a net sheet? Can you help us get all that kind of stuff put together?
On seller side?
Yeah. On the buyer side too. I mean, how quick can you get an answer on how much money they'll need? I mean, if we're looking on the buyer side, because I know you primarily work with buyer side. Sorry, I know I'm saying net sheet. I'm in like a, you know what I meant, like the truth in lending kind of thing.
Absolutely. So if I have a property and the buyer's already at least applied with me and I know their credit scores and whatnot, I can get them a full spreadsheet, and I like to give options. I'll show some 5 options, one with discount points, net, just a par rate, and then even a lender credit option within an hour. So they can see their cash to close, what upfront cost, and what their monthly payment will be within an hour to a specific property.
So yeah, so that's what you need. You need the property because you need to know the taxes, you need to know all that business.
Correct. And I do pride myself on these numbers. Sometimes I lose deals to it because I am honest. I'm not going to show you, a $400,000 home with $50 a month insurance and taxes, at $2,500 a year. I'm going to show you specific to a property, and your cash to close and your monthly payment. Your cash to close will be within $100, and your monthly payment almost to the dollar. The only variable I have is I don't know what your insurance is going to be, but I do try to be realistic so that a client understands what's it going to cost me. Because again, I don't want to be that lender that's the bad guy. Well, you said it was going to cost me $20,000 at the closing table. Why am I bringing $24,000? Well, I looked at the taxes. They were higher than what I anticipated. Your insurance was higher than I anticipated. So that's why you see the big jump. I'm a professional. I should know these numbers up front. There's no reason to be surprised at the end for a buyer.
Oh, so you said one more thing that I want to touch on, and I love that y'all do this. It can be a little confusing and intimidating at first, but whenever you give somebody options, I know the spreadsheet you're talking about. I've seen it 100 times. Why do you give people options? I thought they qualified for this loan. I thought you knew what was best. Why are you giving me options to pick from?
Like I said earlier, is the short-term, long-term goals are different for you than they are for me, that they are for somebody else. If you were going to be in a home long-term, I do recommend paying the discount points, bringing that extra money at closing to save yourself some money monthly, long-term. Like you said, what if you're a first-time home buyer? You know you're going to be moving out of this house in a year, 2 years, 3 years. Does it make sense to you to bring, I do like to exaggerate a little bit so that it makes our point visually, but does it make sense to bring an extra $5,000 to save $20 a month? If you're going to be in the home 250 months, that's a long time. Yeah, if you're going to be in that long term, you're going to pay yourself back. Or you start to think about it. I may be in it long term, but that extra $5,000, if you're married to somebody like my wife, We're going to need a new couch. We're going to need a new bedroom set. We're going to need all these new things for our new home. We can't bring the old stuff. And if my payment is only $50 difference on my home, hey, I can afford that. I'll just take one date night and, cancel that, order a pizza. I can afford the $50, but saving that $5,000 on closing day will go a long way. So that's why I show options. Is what works best for you. I could be the other lenders that just give you that super low rate and say, hey, look at this 2.5. You get excited and say, yeah, I'll take it. But you don't know that, hey, you're paying $5,000 more at closing to get that 2.5. I let you understand the numbers and decide which option works best for you.
So the reason why they're bringing that extra $5,000 is you said this word, and I just want to make sure everybody's clear on it. You said there's discount points. What are discount points? Like, what's a point? What's a discount point? Why would I bring an extra $5,000 to buy these legendary things?
So each client will have a different rate based on their credit score, debt to income ratio. There's many factors that go into pricing a rate. There's not standard rates across the board. And that's why I hate the question, hey, Aaron, what do rates look like today? Rates are rates. It just depends on what your profile is going to look like on a specific day. So for Colin and his profile, you will have a par rate. That is we'll consider your rate. If you wanted, you can buy down your rate. Those are your discount points. So if your par rate's 3%, you could pay 1% of your loan amount to lower your rate to 2.5. Or we can do the inverse. Hey, Aaron, I've got my down payment. Closing costs are a little high. I'm kind of struggling there. What I'll do is, instead of giving you your 3 at par, let's look at 3.5, and I'm going to do a 1% lender credit towards your closing costs. So that's going to be me as a lender paying that closing cost, lowering your cash to close. Gotcha.
So you can buy yourself down a little bit. And then last question before I let you go, because this one drives me crazy when people use this incorrectly. What is the difference between an APR and an interest rate? An APR is an annual. Yeah, what does APR stand for? I'm gonna let you.
The annual percentage rate. Annualized. So I hate explaining it because I get it, but it's hard to verbalize for me. But your interest rate is what you're going to be paying for over the term of the note. Like we said, yours is 3%. You're paying 3% on what you borrowed for 30 years. We'll say that your APR is 3.125. Well, Aaron, what's the difference there? So the way it's calculated is it takes all the costs associated with obtaining your loan, all the closing costs, prepaids, etc., and it annuitizes it over 12 months. So we'll say that all your closing costs were 1/8 of the loan amount.
Yeah. So
%.
The way I like to say it is like your APR is what your interest rate is for the first year, basically, because you have to pay closing costs. But your true interest rate is what you're going to be paying for the other 29, which is always going to be lower. Always. Well, unless you get lender credit, but 99% of the time should be. Right. So that's a big one, guys. So but it's not the same with cars. Like if you see the APR on a car commercial, it's totally different. Okay. So careful with that one. It's kind of a mortgage thing. So that's all I got. I mean, unless there's anything else that I'm missing that I feel like I need to touch on. But guys, it's in my opinion, if I'm going to put this down in a nutshell, hey, Colin, what kind of loans are available? What's the rates at? I don't know. Call Aaron. Hey, Colin, how do I get I don't know. Call Aaron. Hey, isn't there like something where I can get a grant because I'm a firefighter? I don't know. Call Aaron. Guys, that is literally my thing over and over again. How much do I have to put down? I don't know. Call Aaron. I don't know the answer, guys. I mean, I've been around the industry long enough where I could probably guess and get pretty close, but I'm not going to because the minute I'm wrong, somebody's going to hold me to it. Well, you said, no, I didn't say, I said, call Aaron. I said, call Aaron, call Rob, call somebody. Leave me out of this thing, right? Last but not least, y'all do refinances too for all our homeowners out there.
That's correct. Get people moving. Like I said, rates are moving right now. So get in while the getting's good because starting next year, I'm going to see, and we're seeing this across the industry, rates are moving, so it's drying up. But right now is the perfect time to refi. And we can do rate term, cash out. We handle it all.
Again, guys, rate and term means I'm going to leave my loan amount the same. I just want to lower the rate. I don't want to, and then a cash out means I'll go ahead and borrow more money and get my cash, which is kind of nice. I do that a lot with my investment properties because I can take the cash out without paying any taxes on it because it's a loan, not income. So it's kind of a fun little game there. So yeah, it's a great time to do this. Also, I want to point out one thing, guys, why I work with Aaron and why I work with Robin and why I work with the Cash A team. Guys, you can pick any RMLO you want. As a matter of fact, you cannot tell your agent or your customers that they need to work with this RMLO. It is their choice 110%. Usually I give out options. Hey, here's who I like to work with. Here's some other options, guys. Because you don't want to say, you don't want to give just one, just being honest. You can't do that because they come back and something blows up and they say, well, you said I had to use them. No, I didn't. You got to give options. So always give options. But I do strongly recommend working with the Cash A team because of the way they work. But guys, no RMLO anywhere can give you any kind of kickback. They can't give you gifts, buy you lunches, do anything like that. Yes, I will go hang out and play golf with Aaron, but I pay for my round of golf. Aaron pays for his round of golf. I like it because I enjoy his company. Guys, he's fun to work with. That's why I like it. Guys, no RMLO can do that. It is 100% against the law. They cannot try and buy your business. So the good ones know there's two ways that these RMLOs work. Some of them work on volume, where they're just going to throw crap against the wall and see what sticks. Those are a lot of times those are the guys that are online and you see TV commercials for them. That's how they work. They just throw crap against the wall and see what sticks. They'd rather spend $1 billion in marketing than actually sit down and work. The other kind are the ones that are based on service, that they are going to make sure that you need to know what you need to know. I wouldn't recommend taking advantage of this, but if I'm on a Saturday and I want to submit an offer, I can call Aaron and go, Aaron, I need a pre-approval letter like that says this number and this amount and this stuff, because it's going to tie in with my offer. Let's say, they're approved for $600,000 and I'm trying to buy them a $400,000 house. I don't want a letter that says $600,000 because they're going to be like, no, he can afford more. I don't want that because then we get into this weird negotiating fight. So find an RMLO that provides the service, that is responsive, and that takes care of the job that you need. And guys, for those of y'all that don't know, that aren't out there, that haven't really worked with anybody, all the new guys, I would definitely recommend starting with the Cash A team. And as your career goes on, you're going to see why I recommend them so highly, because it's really frustrating dealing with some of these guys. Really frustrating. So that's all I got. Anybody else, any questions, anything like that? Otherwise, I'm going to let y'all go eat. I normally like to eat during these lunch and learns, Aaron, but the only thing I have in the house is chicken, and I can't think of a polite, easy way to eat chicken in this house right now. But on the phone, I don't think everybody wants to see that. So we're having our house retiled. Right now, the entire place is covered in dust. The refrigerator's moved, like it's just complete. Yeah, and I'm like, there's one thing, and it's chicken, and I didn't have time to run go grab something to eat. So I'm trying to be polite.
We'll let you go grab your chicken.
Yeah, same. Hey, Aaron, thanks for the time.
Appreciate it.
Guys, if y'all have any questions, put them in the chat. Guys, it's going to be on the YouTube channel. Subscribe. Put them in the chat. I'll get back to him. If you need Aaron's information, he's put it over here. By the way, it's ACAP, KAPP. .mortgagefinancial.com or acap@mfsus.com if you want to email him. And there's his phone number. I'm going to scroll that across the bottom too whenever I get to editing this. 210-288-8657. That's your cell phone, right?
That's correct. 24/7.
See, guys, I mean, that's service. You're not going to get, I mean, you might get his voicemail, but he'll get back. So, all right, guys, love y'all. Go eat some lunch, and thanks for coming.